So in this video, I'm going to be showing you how to use Divergent into your trading strategy. And don't forget, towards the end, you can also pick up the example set using the links below. Let's get started. Let's begin. Now, the common thing when it comes to trading is, should I use indicators or not? And you guys have heard me countless times saying, do not, right? Stay away from indicators. Indicators are dangerous. Indicators are the devil, etc., etc., etc. However you might want to look at it, there is one piece of an indicator that I absolutely love and adore, and it is the only part that I like to use with my teammates and saying, this is the only thing as far as you can go with indicators, apart from some simple moving averages and stuff like that. But when it comes to implementing indicators, divergence is the only thing that I will allow. Okay, so now let's get into why. Okay, so what I generally do for divergence is I plot MACD, okay, MACD. So I'm just going to click on indicators. I think I have it here, but I'm going to show you how to do that. I'm going to just close this up and I'll reload it. So I'm going to click on indicators. I'm going to type MACD and it shows up here. If you're on MT4, you will also have that in your indicator list. And here are the settings. I just used the standard settings. Okay, here's the inputs. The fast is 12, the slow is 26, and the signal smoothing is 9. Now, for those of you who do not know what that means, and they're like, I have no clue what those numbers are, here's a little quick rundown. The fast 12, which means this line, the blue line, the faster one, okay, it always follows the price faster. It is known as, the setting is set at 12, which means it will take the average of the last 12 candles. The other one says 26. It will take the average movement of the last 26 candles. Okay? Does that make sense? So you want to use this. Now, this is very useful in seeing the momentum as well of the market, to find out, is there any speed and momentum in the market? Can I take advantage of that? Okay? So now let's understand, what is this word divergence? What is this divergence? Sounds like a movie, Divergent. But what is this divergence? So now let's take a look at this I'm going to make the charts a little bit bigger, and I'm going to show you something. Now, the markets, you want to generally work with a few things. You want to work with trends, and trends give you two things. In an uptrend, you have higher highs and higher lows. In a downtrend, you have lower highs and lower lows. Okay, now what does that mean? What does that mean? Okay, what does that mean? So in an uptrend, you will have, if this is your highest point, the next highest point is higher. Okay, the next highest point is higher. Okay, and your lower points are also getting higher. Okay, that's an uptrend. That's a confirmed uptrend, higher high and a higher low. Okay, in a downtrend, it is the opposite. Okay, if this is your highest point, your next highest point needs to be lower, like that. And your lowest point also needs to be lower. And that's when you have a confirmed downtrend. Okay, so far so good? Okay, good. I think the polls are still an issue. Is the poll still an issue? Okay, let me see if I can move the poll. Okay, I see someone saying, sorry, I'm late. That is unacceptable. You cannot be late to the webinar. No, it's okay. Don't worry. If you missed anything, it's going to be recorded. Not to worry. Let me see if I can remove the polls for you guys. One moment. Perfect. So let's begin. Okay, so now that everything is all cleared up, we don't have to worry about the poll. We don't have to worry about the design. We're just talking about this divergence thing now. Okay. So in a trend, remember, uptrend, higher high, higher low. Basic stuff. Downtrend, lower high, lower low. Okay, if you don't know these terminologies, just make sure the angle is always downwards for a downtrend and the angle is upwards for an uptrend. Okay? Now Now, what does that mean for us in this indicator on the bottom? What is this indicator doing on the bottom? So let's take a look at that. Now, if your indicator that you're looking at is doing the same thing as your price. So let's take a look here. Now notice this is a downtrend, right? Because we have lower highs and lower lows. So here's a high, it gets lower. Here's a low, it gets lower. Now if we look directly parallel down into the indicator sections, you would need that same concept to happen. You have your lowest point here, and you need to have another lower low here. But we don't have that. Okay, from this low to the next low, the markets went down, the price went lower, but so did the indicator, he went lower. But from here to here, price went lower, but the indicator did not. That is basically called divergence. Okay? Basically, it tells you something is wrong. Something is wrong. Okay, for those of you who are asking why doesn't your MACD have histogram, I don't use the histogram, I turn it off. Okay, so the histogram, for those of you who are wondering what is a histogram, it's this thing, it looks like that. I turn it off. Okay, I turn it off, I don't need it, I turn it off. So here we go, boom, I turn it off like that. Okay, all right, so now let's take a look at this in some more examples. Okay, right now the first thing you want to do is focus on when does the divergence happen, and then we're going to focus on, well, what does that mean? What does that mean? Okay, and more importantly, why? Okay, more importantly, why? Okay, we're going to work on this only with the MACD today. We're not going to use any other separate indicators, just the MACD. Okay, just the MACD. All right, so let's take a look at this in terms of this uptrend coming here. Look at this. We have the markets, here's the highest point, and then it goes higher, and then it goes higher, and then it goes higher. Each high subsequently gets higher. My lows subsequently get higher. We have an uptrend. So, same thing, if I go down parallel, we got a high here, and we got a high here. No divergence, that means the trend is healthy. No divergence, that the trend is healthy. Now the next one, here, if I go down parallel, wait a minute, where's my higher high there? It's actually going lower. It's actually going lower. Now, can any of you guys tell me why is that? Okay, many people know what is a divergence. I want you to answer this question, why does it happen? If you can answer that question, you have passed Naveen's test of thinking. You think outside the box. Okay? Why does the divergence happen? What is going on there? Okay, some people are saying momentum is slowing down, weakening of momentum, opposite, lots of sellers stepping in. Okay, well, how can the momentum be slowing down when you can actually see the markets are making a higher high? How can the sellers be stepping in if there is a huge green candle? Right? These are not correct answers. Okay, all right, Abhishek, that answer of it is the average of the last 12 candles. Okay, so now let's take a look at this on a simple drawing, on a simple drawing. So let's go into this towards the end here, and I'm gonna show you right here. So what happens is when you're working with price, okay? So I'm gonna first start drawing price. We're gonna work with price first. All right? We're gonna work with price, and then we'll work on the indicators, and then we'll work on different time frames. So I'm gonna show you piece by piece, step by step. Okay? I want you to try to focus as much as you can and avoid just chatting. So just watch, just watch. Okay, so you're seeing price in an uptrend going higher, pulls back, going higher, pulls back, going higher, pulls back, going higher. Okay, now in this whole concept, your MACD on the bottom might be doing the same thing. Your markets go higher, come down a little bit lower, and then they make a higher high, come down a little bit lower, and then they make a higher high, come down a little bit lower, and then they don't make a higher high and they start tapering off, right? So this is doing the same thing as these highs are getting higher. Okay, sorry, this one was a little bit too soon here. That's okay, but you guys get the idea. And then this one, the last one, made a higher high, but not here. He didn't make a higher high, but it didn't make a higher high over here, right? Does that make sense? So if you don't have a higher high, now the question is, why does this happen? So let's go into the explanation of why does it happen. Okay, now when you have this uptrend, on a lower time frame, your uptrend is fractal. Okay, your uptrend is fractal, which means whatever you see on your current time frame, okay, let's call this the 60-minute time frame. Okay, this is your 1 hour chart, your 60-minute time frame. Now, if you go down one time frame to the 15, or even go down 2 time frames to the 5, what you're gonna see is this first uptrend, okay, this first one is gonna look like this. Okay, it's gonna look something like that. Then the pullback, this piece, is gonna start looking like this. Then the next move up following that is gonna do its similar things, followed by similar things on the way down, followed by similar things on the way up. However, that last piece, the pullback and the move up, is gonna do this. There's gonna be a lot of chop on the way down, and then on the way up, it's gonna be like that. It won't have much division inside. It's gonna be very, very aggressive looking. Very, very aggressive looking. Okay, up until now, everyone with me? Okay. I know this is gonna get complicated, so I want you to tell me right now, up until this point, you understand what I'm saying? Okay, every subsequent higher high has some subdivisions inside of it. But the last one does not. It has very less subdivision inside of it. Remember what I told you initially, that my MACD is measuring the last 12 and the last 26 candles on average. If I take the last 12 candles on average, it's gonna say, according to the last 12 on average, the momentum is down, and only maybe the 12th candle it's up, but together the average is down. And that's why you have a divergence start to show up, because your market is moving too fast and price cannot make sense of it. So far so good, everyone with me up until now? Okay, so far so good? All right, now let's proceed into, now what does that mean? What does that mean? Okay, so towards the end, now how many times I've told you guys in multiple of the webinars that when price, let's say this is coming from a downtrend. Let's say it's coming in from a downtrend. When price goes up, who buys that? Who buys that first initial push up in a downtrend? Nobody. Nobody. Who buys that next push up? Some people. Some people buy it. In fact, some of the sellers start to get stopped out thinking, hey, this is supposed to go down more. Why is it not going? They get stopped out. And when prices start to go higher and higher, more aggressively, the public starts to buy it. This is where we call, it's the dumb money. It's almost like the trap traders are now jumping in at the very end of the move. They're jumping in at the end. Okay? Now, do you see how if a sudden move goes up into just 1 or 2 candles very, very quickly on the 5 minute, on the 10 minutes, on the 15 minutes, on the 60 minutes, an all time frame, it looks like it's just shooting up, maybe some news or something, what do you think the average person sitting behind the computer desk is gonna say? oh my God, it's going up. I need to buy it. I was in the sell. I got stopped out. I can clearly see it's a buy. My mom can see it. My dog can see it. My neighbors can see it. My wife can see it. My husband can see it. It's a buy. So they jump on the buy. It's just like Bitcoin. No one trades at the early stages, but later, as it starts to take off and goes crazy, goes parabolic, people start jumping in. Yeah, it becomes Bitcoin, right? Varun, very good. So people start going crazy. So they start buying that thing. Now that buying doesn't make sense on the MACD because it's just one last candle. It's just one last candle going up. And the MACD is showing you the average of the last 12 or 20 candles. They're like, hey, according to the last 12 or 25 candles, the price is still here. It's not going up anywhere. The average is still low. Hence, divergence starts showing up. It's like a cheating method. It's like the divergence is showing you when the dumb money just got in. Does that make sense? Do you understand now why a divergence shows up? The clue is not, do you know what the definition of divergence is? Forget the definition. Throw it out the window. What you need to know is why does it happen? Make sense? Okay, now that we've understood this a little bit, let's go into a little bit more examples of how the divergence are showing up. Okay, let's go into some more examples of where you see divergence coming up. Okay, so the question, one of the questions is, dumb money means what? So the dumb money basically is the money that's chasing the market, right? The dumb money is like when someone is just running after the market after the market has already made its move. You know, that's in the industry it's referred to as the dumb money. Does that make sense? Okay. So let's take a look at this in some more examples. Okay, yeah, it's the reaction money. It's the emotional money. Okay, it's not analysis money. Okay, so let's take a look at this in some more examples here. Okay, so in this particular sequence here, we have lower low sequences right here, lower low sequences, and if we go directly below, we should have lower low sequences. So we have a low here and a low here, and it's actually still following this momentum. It's still following this downward movement. Then we have another low here, and if we look all the way down, it's doing the same thing. It's following that trajectory of down, down, down. So this is doing the same thing, down, down, down. Okay, that means nothing is out of the unusual here. Nothing is out of the unusual here. Now, on the other hand, if you take a look at it just slightly earlier in this uptrend that was coming in, here's your highs getting higher and higher and higher and higher. Now, on your MACD, what's going on here? Do you see a divergence happening? Where's your highs? Your highs are actually getting lower and lower and lower. It's telling you the average does not make sense. It's only visually looking high because of these sudden boosts of the markets jumping up. But before that, look at that. They're small candles just grinding and grinding and grinding and grinding. But suddenly when a big green candle comes, the public jumps in. They jump in thinking, oh my God, it's a buy. My grandma can see it, my cousin can see it, my sister can see it, the dog can see it. It has to be a buy. If I don't buy now, I will never get my Ferrari. Okay? And that illusion repeats over and over and over and over again in the market. Okay? Does that make sense? Okay, so a divergence basically is telling you when people just ran after the market for no reason, and divergence is telling you something is wrong. It does not tell you hit the sell right now. It means something is wrong. It means something is wrong. Okay? So far so good. Everyone with me? Everyone understand? Okay. All right. No, for those of you guys who are thinking that once a divergence happens, it's a sell. No, I wanna protect you from that by telling you when you see a divergence, it does not mean it's a sell immediately. Because take a look at this. Take a look at this. When is the first time you notice a divergence? It's here. You have a higher high here, but you don't really have a higher high down here. That's the first time you notice a divergence. But if you sold that, you're in trouble. You sold that, you're in trouble. Divergence just tells you something is wrong. It should tell you if you're a trend trader and you're looking to buy all of these pullbacks to do a buy, it's just telling you stop doing the buys because the buys are becoming dangerous. Does that make sense? So it's a hint that tells you stop the buys. Something is wrong. It does not tell you immediately turn seller. Okay? Up until now, everything making sense? Shall we go on to the next example? Okay, now let's take a look at this. All right, let's take a look at the next example here. Okay, so moving further down. All right. So, here we go. In this particular downtrend here, okay, in that particular downtrend, you see the market's doing the same thing. Markets are getting lower and lower and lower and lower and lower and lower and one more low. Okay, but your divergence is not lower at all. In fact, it starts going higher and higher and higher. Okay, so does that means anyone who's on standby on this, they're on standby because little bitty candles, they're like, I don't think that has anything to do. They're waiting, they're waiting, they're waiting. And then suddenly this red candle shows up. Suddenly that red candle shows up and everyone's eyeballs are like, oh, Jesus, did you see that? Whoo! Yes. Hit the sells. Hit the sells. My God, sell the house. Give me the cash. I need to sell this right now. Okay? And that's when they start jumping in on the sells. Now, why is this illusion important? Why is this illusion important? And what does this mean for a trader who has a little bit more education? What does this mean? What does it mean? Okay, so that's the question we want to answer. So the first step is obviously, did you understand the divergence? Okay, the next step is, do you know why a divergence happens? And then now we're gonna get into a little bit of how can I now use this? Okay, what's the point of learning anything and educating yourself if you don't know how to use it? You can go to college for 50 years if you want, but if you don't know how to make money from that information, what is the point? You're just a smart person at the dinner table that's boring and annoying to everybody. Correct? Yes or no? So, the objective is always, can you hit the bottom line, yes or no? If you cannot hit the bottom line, you keep your mouth shut, you keep studying. Okay, so now let's take a look at this further. Okay? All right. So, once a divergence happens, right? Okay, what does this mean for us? So, step number one, the moment you spot a divergence, you stop. You stop trend trading. Okay, that's rule number one. You stop trend trading. It's almost like I'm giving you a strategy here. Okay, you stop trend trading. If you have your own strategy, this can help you filter it out a little bit better. It's like my worst handwriting ever. You stop trend trading, so that means any pullbacks that you're trying to sell should not be happening anymore because there's something wrong in the market. You do not need to hit the sells anymore because danger is coming. You got to be very, very careful with this. So that's step number one. Step number two is you now analyze the big boy. You have to analyze the big boy. What are they up to? And you have to sit there and ponder, what are they up to and why is this divergence happening? Okay? Why is the market chopping little by little? Why is the market chopping little by little? Now, I'm going to ask you guys a question. Do you know why the markets go super speed like this versus times when they're just chopping like that? Do you know why that happens? Okay. When the market is going slowly, you have larger players absorbing all the orders. They're absorbing all the orders. So take a moment and try to understand that. If a lot of people are selling, okay, they're selling this for, let's say they're selling this for $1,000. Okay, they're selling this for $1,000, but not many people, because they're looking at this as, it's support. It's support. Then over here, oh, it broke the support. Okay, $2,000. It's grinding its way down. As more and more people sell, the larger players are good. I need more orders because I have 1 billion to buy, and I am not gonna buy it all at one shot. It's gonna make the price jump up, and then I'm gonna have to buy it at this dirty price. I don't wanna buy it at that dirty price. Keep coming down, and I'll keep loading up my position little by little, little by little, little by little. So as it gets lower, the public says, oh, look, it's a downtrend. My mom can see it, my dog can see it, my neighbor can see it, and now they start, more sellers come in. More sellers come in, and they're like, okay, interesting. Price gets a little bit lower, more sellers come in. They're now selling at chunks of 4,000 because now the news is talking about it. The world is talking about it. Did you notice the move down on EuroCAD today? It's plummeted, it's made 2% lower, it's made 20% lower, whatever. Because the news reports the past. It reports things that have already happened. This causes more turmoil in the market. And then this thing shows up. Once this thing shows up, people are no longer selling at chunks of 4,000. The public jumps in. The average public that was on the sideline, they're like, you know what? If I don't get into this now, I'm never going to make it in my life. Now they're doing at chunks of 400,000. Huge amounts of money pouring in because now it looks ready to go. Okay? And at this time, the big boys are like, thank you. I needed a large amount of order, and they absorb this entire area as much as they can. And a lot of the other players are starting to jump in as well. The smart traders are jumping in as well. And this creates the offset. This creates the offset, and that pushes price higher. Okay? So a divergence is a technique for telling you, wait a minute, this is going to get too dangerous. Be careful. Something is wrong. Something is wrong. So it's like your cheat sheet of telling you, wait a minute. Okay, so now I'm going to ask you guys a question. Do you really need a divergence? If you see this enough times and you understand why it happens, you can actually remove divergence and say, I know when a divergence happens in the market. I can visually see it. Does that make sense? So that's the goal of this webinar, is to teach you about divergence, but at the same time teach you enough in such a way that you can say, I see it, I know what it does, I don't need to put it on my charts. I just need to put it on my charts for the first 50 or 100 trades until my eyes get used to it. Okay? How many of you guys are having aha moments so far? How many of you guys understand everything I'm explaining? Okay, I know it's a little bit more difficult than my typical webinars that I do, but I think this will be very useful for you. If you don't understand it this time, you can always come back to it in the future time. It's going to be available on YouTube. You can always come back to it and restudy it. Okay, so I'm trying to explain it as in a simplistic way as possible. So if you pick up a book on divergence, it's going to confuse you because it's just going to give you a definition. It's just going to give you a definition. Okay? All right, so some of you guys are saying, please explain step 1. So yeah, okay, so step 1, which was stop trading, right? So when a divergence shows up, right? When a divergence shows up, which is this piece right here, when the markets are not agreeing, it's basically saying if you're doing a trend trading, what do trend traders do? It's a downtrend, Give me a pullback, give me a better price, and I will sell it. Give me a better price, and I will sell it. Give me a better price, and I will sell it. That's what trend traders do. If trend traders are doing these type of trades, when the divergence shows up, you need to say, stop doing trend trading. Something is wrong. Something is wrong. That's when you extremely stop and you say, okay, I'm not going to trend trade anymore because somebody is eating up all the orders. Okay? All right. Now, don't forget, after this webinar, along with this webinar recording, I'm also going to give you more examples into this, and even my live trades I've taken today. I've not taken them yesterday, a year before. I've taken them today just specifically for this webinar. So you guys can see it firsthand, how the trade is done, how much money did I make from it, and how did I execute the trade. Okay? All right. So you'll see that as well. So that will come into you immediately after. Now, let's take a look at some more examples, right? We'll look at some more examples in a downtrend and an uptrend style. So, because the first goal is to identify. Can you spot it? Can you spot it? Take a look at this. Everyone see this uptrend? Everyone see this uptrend? Okay. In this uptrend, you have a higher high. This was the highest point. The market made a new highest point here. And according to this on your indicator, we did it over here also. So it's check. Market is healthy. Market is healthy. Any pullbacks for buy? Healthy. Market is healthy. So after that, okay, this is arguable if that's a higher high or not. But then afterwards, we do make a higher high here. We're like, okay, higher high again. We need a higher high from here to be higher. But unfortunately, there is none. There's no higher high. Divergence sets in. There's a problem. There's a problem. Now, yeah, so those of you guys who are asking for negative and positive divergence, don't worry about it. Don't worry about it. You don't need to get into the definitions and the textbook stuff. Just focus on what does it mean once it shows up, and how do you spot it once it shows up. Okay? So once this happens, now everyone can spot it right now. Up until now, you guys can spot it, right? Let's take it one step further. How can we take advantage of this stuff? How can we take advantage of this stuff? What does it mean for traders like us to be like, okay, Naveen, I've studied this. You've taught me how to spot a divergence, but how can I use it to actually make money? Because that's what it's all about. If I don't know how to make money from it, then what's the point of learning it? Stop wasting my time, brown man. So let's take a look at this then. Okay. All right, here we go. So we've had a higher high sequence here, but no higher high here. Okay, and the reason why this is happening, is because you have your average candles are telling you the markets are just going this way, flat. And then suddenly only a few candles come up to make a higher high, but the average shows you nothing's really happening. Nothing's really happening. It's just flat. It's just flat. Now let's take a look at this now on one time frame lower and seeing, okay, how does this uptrend look on a lower time frame? We're going to check this uptrend, and we're also going to check this uptrend. Okay, how does it look on a lower time frame? So let me get the mouse here. That's at 518 and at 518. Okay, let's go in. Let's go down to the 5. Scroll back a little bit. 18. Boom. Okay. All right, so this uptrend that happened earlier came in with multiple candles, multiple candles, multiple candles, multiple candles, multiple candles, multiple candles. The next uptrend, fewer candles. It looks almost as if it's the same from the 15-minute time frame as well. Right? But look at all this congestion earlier. Holding, blast. That blast, if you take the average of all those candles, It's going to be confused because it's not blasting here. So the price visually looks like it's making a higher high, but the MACD is telling you, hold up, something is weird here. The markets are not rising slowly, they're rising quickly. That's going to get in emotional money. That's going to pull in emotional money. Okay? Now, when you're watching stuff like this, and you know that on the higher time frame, okay, on the 15 minutes, you had a, let me go back to the 15 minutes so I can show you this. On the 15 minutes, you had that issue. Okay, on the 15 minutes, you had the issue of divergence right here. Okay. Where'd it go? Sorry, I was on the 10 minutes, sorry. Here we go. We had that issue of markets making higher highs, but no higher highs here. Let's take a look at what happens with this money that's just buying and buying and buying. What happens? Let me go up one more time frame to the 30 and then to the 1 hour to show you, are we actually in an uptrend or not? According to a higher time frame, can you tell me which way is the overall trend? Which way is the overall trend? Up or down? Now you have a downtrend here, right? You have a downtrend here, overall running downtrend. In this downtrend, you have prices inching its way higher. Higher, 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 higher. Now let me ask you that same question I asked you guys in the beginning. In this downtrend, who buys this first move? Who buys this next move? Who buys the next move higher? And who buys that last move? Once you're able to spot these things, you now know that this pullback that's going up, if you're a trend trader and you're saying, I know it's a downtrend, this is the lowest point of the downtrend, pullback, give me a higher price and I will sell it. But is this my higher price? Is this my higher price? Or is this my higher price? The question is, when is it going to turn and go back down again? Can you tell me now if you have a better idea of when it's going to happen? That question always comes in is timing. When is it going to be? You all know that it's a downtrend and the pullback is happening. Eventually it's going to go down. The question always comes is when. When is it going to go down? Okay? Because some people might say, okay, I'm going to do my support resistance. I'm going to do my supply and demand. I'm going to do my Fibonacci 61.8%, 28.4%. I'm going to do all kinds of numbers. I'm going to do all kinds of stuff. The moment it touches an area, I'm going to hit the sell. The moment it does something, I'm going to do something. Okay, but you need to read price action at its critical. You cannot do a trade without price action just by the sake of a strategy telling you, just do this when this happens. That's when you will come in trouble. Once you spot the divergence, you mark it. You mark it. You say, my divergence showed up right here. You mark that area. All of your trading activity should happen only on the right side of this line. Anything before on the left side, any sells before the left side of that line is going to cause you troubles. There is a higher chance you're going to get stopped out. Any activity on the right side of the line increases your probability of survival. How many of you guys had an aha moment so far? Making sense? Yeah, Osama, very good. You know, after the buyer is tricked, right? It's what's referred to as trap traders or the dumb money, etc., etc. You know, however you want to call it. Okay, because time and time again, I see people asking the question of, Naveen, I have an issue with timing. Okay, I have an issue with timing. Obviously, I built a whole course around it. about how do you time everything correctly. You know, you got to go through the Mastering Price Action course. First, you must learn about price action. Then you got to go in depth of learning what do I do with the price action. But for the sake of simplicity, I wanted to give you a little quick cheat sheet with divergence. Maybe divergence is going to help you to at least stay away from the unnecessary losses. Okay, because that's what's important first, is reduce the losses and then we'll work on the profits. But reduce the losses first. Okay? All right, so now let's take a look at another example. Let's take a look at another example. So in the same concept, okay, in the same concept, let's take a look at it in a uptrend, for example, in an uptrend. So would you guys say this is an uptrend here? If you just wake up in the morning, you look at this, you're like, okay, here's a high, here's a high, here's a low, here's a low. My highs are getting higher, my lows are getting higher. It gets higher again, and here is my low, and here is my low. It's like, oh, I had an uptrend, but now my uptrend is starting to pull back, When do I know, do I need to buy again? The question is when. When do I buy it again? When do I buy it again? So let's evaluate this pullback phase on a lower time frame. Let's evaluate a pullback phase. Okay? All right. Let's take a look at this area. This is on 524. Let's go down one time frame. I'm going to go down to the 10 minutes. Okay. Here we go. It was on 524. 24. Here we are. Okay. Here we go. Here we go. Okay. So now in this uptrend, this major uptrend that was coming up from a higher time frame. Remember, the higher time frame is based on your time frame that you're trying to trade. It doesn't mean go up to the daily, go up to the weekly, go up to the monthly, go up to your neighbor's house and be like, hey, what time frame are you looking at? Because that might be my big boy. Stop looking at higher time frames, higher and higher and higher and higher. You're only going to cause confusion to yourself and you're going to stay on the sidelines. Don't do that. Don't do that. Stick to a certain set of time frames that will decide, are you a day trader, a swing trader, or an investor? An investor looks for a higher time frame and he works with higher time frames. A swing trader looks for intermediate level time frames and sticks to them only. A day trader sticks to lower time frames and sticks to them only. So if a person who's looking to trade today in the next 5 to 10 to 15 to an hour, if he's trading in that time frame, he wants to trade this session, does he need to know what's happening on the monthly chart? It is not relevant to him. It is not relevant to him. And the same thing for an investor. If he's looking at monthly charts, looking to make the next big move for 2,000 or 5,000 pips, he does not care what is happening on the 1 minute chart. It just is not logical. So do not go too far away from your time frame that you're trying to trade based on your trading personality. Okay, if you have issues with your trading personality, you don't know what your personality is, you can refer to what type of trader are you course that we have on Urban Forex. That will help you understand who you are and what style of trading you need to do. It will help you focus on that a lot. Okay, so now focusing on this trend, we had a major uptrend. Everyone is buying and buying and buying and buying. Now, if everyone is buying, two things are happening. Up at this point, some people who are buying, like some of the larger players who are buying, are starting to remove money. Okay? They're removing profits, which cause a halt in the market. That's when a pullback starts coming in. But what happens in a pullback is if the pullback comes in too deep, it also causes panic and people start selling their buying positions. They start selling their buying positions. And that creates more deeper pullbacks. So far, so good? Making sense? So as the market was initially buying, there's a lot of buyers in there. There might be a big boy out there who's saying, I need to buy more, but I don't want to buy at these horrible prices up here. I don't want that price. Give me a better price and I will buy it. Give me a better price and I will buy it. So the market starts Coming up to this level, it might be a level of support and resistance. Some of the buyers who were buying already, they're saying, okay, remove some of the money, take profit, take profit, take profit. That causes the markets to hold a little bit. It holds sideways and then it starts going down. It starts going down. As it starts going down and breaking supports and it goes lower, anybody who's looking at this who had their stop losses here, they're getting stopped out. And they're like, oh my God, it's going down. The more lower it goes, the more panic sets in. The more people start closing their buys, turning to the sell side. And the more people who are just standing on the sideline waiting for something to happen, they start hitting the sells as well. Sell, 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 sell. Sell, 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 sell. In that selling craze, buyers start showing up and absorbing all those sells with this choppiness. Chop, 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 chop. Someone is eating up all those orders. Someone is eating up all those orders. After that chop, remember, after that chop, you have aggressive, sudden movements showing up, which doesn't make sense to your average market. Your average is like, what? Okay, according to your indicator, it's like WTF, mate. What is going on? Okay, I don't want to say this out loud in case there's some children listening, but your indicator is like, I don't understand what is going on. Why is that sudden move down coming in so aggressively? And that move down is causing everyone to hit the sells, hit the sells. More people are selling because they're not selling up here. They're selling more over here, and most over here. Once that most comes in, that big boy that we observed over here says, yes, I will take all those orders. I will take it. Once they do the buys, once the divergence happens, you as a trader says, there is my dividing line in the sky. And I say all of my trading activity needs to be on the right side of this line. If I trade anywhere before it, I will come into trouble. I will come into trouble. My trading needs to happen on the right side. Make sense? Because now you are anticipating how the big boys are entering into the market, but at the same time, you are disregarding the nonsense that the dumb money does, and you're trying to stay patient as possible, saying, do I want to hit that sell? Do I want to hit that sell? The answer is no. You don't want to hit that sell at all. You want to stay observative of all of this stuff. Yeah. So the one thing you can learn from this webinar is, even if you are not good at price action, right? The main goal is price action. Obviously, you cannot get around it. You need to learn how to read the charts. Okay, you have to learn how to read the charts. But I'm trying to give you a quick, easy way to understand, can you actually say, when the pullback's happening, I don't do anything, I don't do anything, I don't do anything, I'm waiting. Okay, after this purple line, I can do whatever the hell I want. But at least I know when I should not do something. That is the name of the game. Learning to make money comes from knowing when not to trade. If you know when you should not trade, you will make more money. Okay? Do you guys agree? Yes or no? Have you seen any billionaires saying, I'm looking for opportunities all day long? Or do you see billionaires saying, I'm all about risk control, risk management. I'm trying to protect my money as much as possible. If you learn to protect your money, you will eventually make more money, and faster than those people who are looking to make money. Okay? Never forget that. Risk control is how you make money. Okay? So, starting today, I want you guys to promise me right here, right now on this webinar that going forward, you're going to learn patience. Going forward, you're going to master divergence. And going forward, once you do enough divergence, you will try to see if you can understand the concepts of it where you do not need it anymore. So promise me today that you will make the changes necessary, needed, and stop wasting ridiculous amounts of money in trading, because it's absolutely absurd to just sell and buy for no reason. Okay? You have to increase your knowledge of how to trade correctly. You have to be better at that. Okay? And I will do whatever I can along with my team to help you guys reach the next level. You know, whether you're watching our free webinars or you're in our courses, we will take you the next level every single time. Okay? And those of you, a lot of you guys are in this webinar. We saw more than 85% of you guys are here, not for the first time. You know why we have the biggest webinars out there? It's because we don't waste time. We just get straight to the point and we explain it slowly in a way where you can actually have a breakthrough. Okay? So slow and steady, okay? Slow and steady, but at the same time, not too slow where you're wasting time. But it needs to be slow enough where it just needs to be that initial point. That's why the whole webinar, did I tell you what does a divergence definition mean? Never. What's the point? What are you going to do with the definition? You're going to look good to your neighbor? All right, so let's get into some Q&A. There we go. Okay, hope you liked the webinar so far. Let's get into some Q&A. Let's see what you guys have to ask. So let's get into this one by one. Okay, so what's the first question if someone can put it up? Okay, so Chris Sayre is saying, will we ever get a 4CB webinar? Yes, there is going to be a 4CB webinar. So for those of you who do not know, that is the 4-course bundle. There is a webinar coming up for all of you guys who are at that level. This is going to be a much more premium webinar. It's going to be private, behind closed doors, and that is coming up this upcoming month. So look out for that. Okay, next question. Okay, this question is from Vansat Goel. Do you look at highs in uptrends and lows in downtrends? What about looking at lows in uptrends? Of course, you need to look at both pieces. You need higher high and a higher low. But if you're asking in terms of divergence, if you're in an uptrend, I only focus on the highs. It's okay. If you're in a downtrend, I focus on the lows for in divergence. Okay? All right, so next question is from Faham Parsa. Can we go with the big boy and sell it when they are removing money? Yeah, absolutely, absolutely. So if you're in an uptrend, you're going with the big boys and you're making money with them. But if you see a divergence show up, get out, get out. You need to remove money. Just like the big boys are starting to remove money because something is going on. There's an accumulation or distribution in the market. These might be tough words, but basically the big boys are starting to remove money or add in money to go on the other side. So be careful. Next question is from Divnurman. Naveen, question please. Can you use the RSI or the stochastics to trade divergence? Absolutely, you can. I personally prefer the MACD because it is more momentum based. So you can use the other ones as well. They will do the very similar things. They're measuring the recent movements. That's what they're doing. Okay, so next question is from Ashish Chowre. Sir, your last webinar and this webinar is connected and can be treated as one strategy. Absolutely, and I'm glad you bring that up. It's very good that you're focusing and paying attention. Yes, you can put those two together, okay, and you can develop a much more stronger strategy out of it. This whole thing was made for you to use in your strategy that you're currently using. But if you don't have a strategy, you can simply go with what I'm showing you on the webinars, and that is going to be your strategy. We focus purely on price action, okay, purely on price action. Next question, Ryan, do I need a high-tech computer to trade extra well? No, absolutely not. I use few things where I use my laptop and I use my cell phone. That's all I use. That's all I use. I don't have 30 screens. I don't have a big projector that 90-inch TVs and stuff like that. Okay, and actually if you go onto Urban Forex blog page, you will actually see all of our desks, my desk, my senior trader's desk. You'll get to see all that. So if you head to our blog, you will see all of our trading desks, how it looks like. So this next question is from Munish. What do you do after spotting divergence, buy or sell? Wait a minute, have you been listening the whole webinar or did you just get in here? Munish, I recommend you please go over the recording that I'm going to send to you in 30 minutes and watch the whole thing from beginning till the end, and then watch the example sets after that. You will have the answer to that question. Okay? It's like saying, so how do I trade? It's like, I'm sorry, I don't know how to answer that. Okay, so the next question is Christian saying, the techniques and knowledge you teach about trading in Forex can be applied in the stock market. Yes, absolutely. I just released a video on that. You will see it also on our blog page about that. Is the techniques I teach is based on human psychology, the human movement in terms of technical analysis. So if you actually apply this to cryptocurrencies, futures, stock market, commodities, metals, you can use them in all. As long as there's a human on the other side, it works. Okay? Vish. Looks like divergence can be used to spot potential fakers early, the last big move before the turn. Absolutely, absolutely. It's made specifically for that. It's made for the average public to get confused and jump into the wrong side by thinking, oh my God, I'm missing out. It creates that greed and fear. Okay? The next question is from Keegan. Keegan saying, how can we make divergence work with V formation? Now that is something we're talking about stuff inside our course now. I won't be able to talk about it so openly. This is some course material stuff now. So you can ask that question inside the course. The team will get back to you instantly. Okay, Renee. Naveen, do you use divergence also in counter trend trading? Yes and no. What is counter trend trading? You're going against the flow. Okay, you're going against the flow. Remember one thing, if you haven't watched my previous webinar on how to identify a trend, watch that. There is no such thing as going against the trend. If you're a professional trader, you never go against the trend. So a counter trend trade, if the counter trend is this way, the bigger trend is coming down this way. So what I just showed you in the last trade in the example is a counter trend trade that was going upwards inside a downtrend when the divergence happened to take that trade. Okay, so that will answer your question. So the next question is from Sikandar Masood. What do you think about Elliott waves? Oh, well, they're great. They're fantastic. I don't use them, but they're great. They're great. Okay, next question. This question is from Stefan. Can we use divergence as an entry trigger immediately, or do we have to wait for more price action? Always wait for more price action. Divergence is not an entry mechanism. It is just a mechanism. It's like an alarm. That's all it is. It's like the alarm's ringing, there's a smoke alarm going off. You have two choices. You can stay and be like, let's see if it's anything important, or you can get the hell out of there. It's up to you. But it's an alarm. It doesn't mean take action immediately. You need to observe, is there actually a fire somewhere? You have to check that. Once you observe, is there actually a fire, and you confirm it, then the alarm is real and you run. Okay, does that make sense? Okay. Ryan, when can I advance my trading career? I don't know what level you're at right now. You got to go piece by piece. If you're with us at Urban Forex, you got to go through the levels that we lock. You cannot go past it. You got to go through the mastering price action, the 4-course bundle, and then eventually, obviously, you will come into the elite community where you will be trading with me and other senior traders, live trades on multiple sessions, and you'll be seeing my own trades as well. Shane, would we use divergence to gauge the end of a test phase? The end of a test phase? No, the divergence would be just before that. It would be just before that. The test phase is basically telling you we're preparing to go. Okay, this is more of a course question. Okay, Julius, do you recommend we always plot the indicator when we sense divergence or use price action? Both. So the thing is, I don't use it. Okay, now this might be a controversy. Like, what the hell? Why don't you use it? What's going on? I've used it so many times that I actually see it with my naked eye. I see that little congestion coming in, big boys buying it, and then a sudden move happening. When I see that sudden move, I check it on multiple time frames. I'm like, that sudden move is not broken up into pieces. It's a sudden move everywhere. Something's wrong. Divergence. I don't need to open up the MACD to see it. So, you can look at it in that way. Okay, last question. Ali, do you recommend always to listen to divergence? Yeah, I don't say always, but it's a good tool. It's a good tool. It helps you. Because like I said, not many people in this webinar are purely price action based. That's why I wanted to give you something that's like a little cheat sheet, a way, a back door into price action. Okay? It's like you're looking with binoculars far away of how does price action work? It's a little help. Okay? So I hope that makes sense. So thank you so much, guys, for coming. Remember, 30 minutes from now, I'm going to be sending you the example sets and the recording so you can rewatch this whole thing, practice it in the example set, and even I'm going to send you later on today also my live trades that I've done with this. Thank you again for coming to this webinar. I know a lot of you guys have made sacrifices to be here. I will never waste your time. It has always been a promise of mine. It has been a promise of my company as well. We will continue to deliver some of the best things out there. Urban Forex is the place to be. Thanks a lot for coming. Until next time, see you guys. Bye for now. Okay, so I hope you enjoyed the webinar. Now don't forget, you can pick up the example set using the links below to practice everything that was taught in the webinar and much more. I look forward to seeing your progress. Good luck. Cheers.